Hello guys, welcome. So I'm live here on Instagram and also over here on YouTube, and this is a special edition of my Ask Andy weekly Q&As lives for you to ask questions. We're going to focus today on the budget, which happened this afternoon about 12:30. Took a long time, must be going on for near on to an hour, where the Chancellor Rishi Sunak kind of set out what he was planning the government's both spending and taxation plans to be for, well, the foreseeable future. I mean, this is the second one we've had this year. And actually, during the pandemic, there were a number of these sort of extra kind of statements and extra kind of plans. So, yeah, this is in theory the first one he's had that we're not in crisis, but who knows what's around the corner. And we could well have another one next March, and who knows what's going on. But in theory, this is what they kind of want to do going forward. Excuse me. So what I'm going to do, hi Friday Finance, hi to Rochelle, hi to In the Outdoors, and Nixby, and Dilshaz, and Rach, and Warren. Nice to see you guys on Instagram. Hi to Foysha, Tracy, and Rob, and Nadine over on YouTube. And what I'm going to do is I'll probably start off just taking you through some of the headlines, some of the things that were announced. Feel free to just jump in with questions as we go along, and I'll try and come back to them, or just wait until we sort of come back into those parts and we can pop along and see what your thoughts are there. You might already be across this. You might have watched it. You might have read about it. I have got a whole article over on becleverwithyourcash.com where I detail some of those kind of key announcements. And that's what I'll go through quickly now at the start as well. Hi to Nath. Hi to Vilesh. Nice to see you guys watching. Let's start off with, a lot of this stuff was trailed from last week. And at the weekend, the last few days, so many leaks about what was going on, which is so many more than we normally would get for the budget. I mean, it was a lot last spring. A lot of these kind of pre-announcements could practically write the article before the event had taken place. But I'll take you through those as well in case you missed them. But there were some new things as well. And obviously, we're doing this on the day of the budget. There could be some things that come along in the next few days as people dive into that kind of the small print, the paper that's released with all the details. They might find extra things in there as well. So let's start off with the main things that happen in terms of our jobs, our wages, those kind of things. You probably already knew about this because it was trailed quite a lot in advance. The minimum wage will increase from next April. Now, this will go up from £8.91 an hour to £9.50 an hour. So it's quite a large increase. That's 6.6% increase. So if you measure that against inflation, the current rate is 3.1%. That's quite a big increase for those who are at the lowest paid end of things. So that means someone who works full-time on minimum wage, so 35 hours a week, they will see income jump by £1,074 in a year. Sorry guys, a bit croaky today. But that's obviously before tax. That's obviously before the national insurance as well, which we know will also increase by 1.25% next April. So those things start to sort of decrease. That £1,000, they won't get to keep all of that. There are also going to be increases for people on minimum wage, but below this level. So if you're 21 or 22, it's slightly lower. That main minimum wage is for 23 and above, 23 years and above. Similarly, 18 to 20-year-olds, under 18s, and people on apprenticeships, they all see increases in April to the minimum wage. One thing that bit of a bugbear for me here on this is that they called it the national living wage, which was kind of rebranded by the government a few years ago, but it's actually not going to be anywhere near the living wage as set by the Living Wage Foundation. So it's a big increase, it's a good increase, but still, with the way inflation has been going and the way it's already been behind the real living wage, it's still not necessarily quite enough. So that's the main thing there in terms of general wages. If you are someone who works in the public sector, obviously whether you get a pay increase or not is decided by the government. They froze it last year, but that is going to increase. So teachers, NHS, the police, civil service, all those kind of places, they will see a pay increase. But what that is, we don't know. It obviously will vary by sector, and there'll be independent boards that kind of work on exactly what that's going to be. But you will see an increase, whereas last year you saw a freeze. So that's anything about wages. If you've got questions on that, do give me a shout. Obviously, if you're a normal employer, you're not a minimum wage, you're not public sector, then if you get a salary increase, it'd be down to your bosses themselves. Interesting thing here as well is that obviously the companies for that minimum wage increase, they've got to find the money for that somewhere. So that could well be they pass those costs on to you, or at least some of that onto you and I when we go into a shop, we go into a restaurant, or whatever the business is, anywhere that basically has customer facing people. If they've got to pay those low paid workers more, they've got to find that cash from somewhere. Quick hellos to some other people who've joined in now. We've got Noel, we've got the Life and Times of Barb, we've got Ed, we've got Orman, we've got Chris, we've got Around Us, we've got Abdallah, we've got David, we've got Kakardi, we've got Jonathan, we've got Will, we've got Darren, Stephen, we've got Az and the Old Turtle. Hey guys, thank you so much for joining in. Let's have a quick question here. Here's one from Abdallah. He says, good evening, Andy. I hope you're well. As part of the Rishi Sunak talk today about numeracy, he said the average adult had a numeracy the same age as a 9-year-old person. That's awful. This is interesting. This is part of some funding that's going to go. It's a lot of money, but not a lot of money in the scheme of all the other things that were announced today. There's going to be about 500 and let me check, because I think it's 580 million pounds will go towards a new scheme called Multiply, and this is going to help 500,000 adults here in the UK improve their confidence in numbers. So that in itself, I think, is a good thing. See actually what the end result of that is, but that's something there in terms of numeracy and understanding how people are with money. That can make a big difference. Something else that happened today in terms of income, the other big announcement in income involves universal credit. And this is one that wasn't announced in advance. This was a little bit of a surprise, although a few newspapers did have information on about it this morning. So there still was some leaking going on. Now, you're probably familiar with the universal credit uplift that happened during the pandemic. So people on universal credit got an extra £20 a week. That ended at the end of September. So that's a huge amount of money that people have lost out in the kind of they will be losing out as the months go on. It makes a big difference to someone, 20 quid a week, if you are really on benefits and don't have much money coming in. There's actually going to be, for some people on universal credit, an increase. Now, it won't necessarily completely replace that £20 a week, and it also won't affect everyone. And this is around something called the universal credit taper. This gets quite complicated. But the universal credit taper is basically how much money you can earn before your benefits start to disappear, and how much of that extra money, your benefits disappear as you earn money. It's all quite complicated. But effectively, if you earn over a certain amount of money while you're on universal credit and you're still able to get universal credit, at the moment, you lose 63 pence in every pound you will lose in your benefits. So basically, when you're working, every pound you earn, you're only basically getting 37p, which is nothing at all. That is going to change soon. In the next few weeks, at least before the start of December, that will change to a taper rate of 55p, which means you keep 45p in every pound. So that is going to be a big difference to people who are already working. They will get a decent chunk of cash extra in their pockets. Again, it won't go as far as that £20 uplift. It will make partially a difference. What it won't help is anyone who is on universal credit and not working. So people who maybe can't work or unable to work or just haven't got a job, they are not going to see that benefit. There's still a huge number of people who will be missing out. Comment here on minimum wage from Simon. He says, I do think the minimum wage increase to £9.50 is welcome, but not sure how much smaller businesses will cope with such a high increase, to me anyway. Yeah, absolutely. I agree with you. I think it's great. I think it's needed. But it's, where are the small businesses going to get their money from? The only real thing that came through in today's budget to help small businesses, there would have been some smaller bits here and there, I'm sure. But the only big one here was around something called business rates. Now, this is something that physical businesses pay on their premises. If they have premises, so online businesses don't necessarily have this. But physical premises have to pay business rates, and this can be quite expensive. And there's been a lot of kind of a bit of a clamour to kind of change to say how unfair it is. There's been a review. They said today they're not really going to do a huge amount really in terms of changing it. They still do exist. But for the next 12 months, there will be a 50% discount for small businesses in the kind of retail, leisure and entertainment. So pubs, clubs, shops, whatever it might be, they will save some money on business rates over the next 12 months. So but I would suggest a lot of the money they would have spent there will now be going to the wages for their staff if they were on or around that minimum wage. Hi to JTWM12. Hi to Graphic That. Hi to May 1st. Hi to Bukikoro. Hi to Shane. Who else you got there? Who'd say hello to? Starburst as well. Dilch has said here, I think the taper is to try and get shops to get temporary Christmas staff to help with the retail shortage, which is quite challenging. Yeah, that's an interesting thought there. So another part of that universal credit taper that I mentioned is obviously it might put people off. So why would I take on extra hours if I'm only going to get a small percentage of that back in my pocket? I guess if you make it more attractive to people to take on extra hours or take some extra work on, then that could make sense in terms of Christmas sort of temporary work. You do some extra shifts or maybe take a second job where people need that extra workforce and have not affecting your income too much. Hi to Billy, hi to Francis as well. For those of you just joining right now, we're focusing mainly on the budget today, which was announced by the Chancellor Rishi Sunak, but I will come back to other questions we've got as well at the end if we've got time. So let's work our way through some of those big budget announcements first of all. So we've done kind of jobs and benefits there. They're the main things that are happening with those ones. There was nothing in terms of student loan changes. So you think about that, how that might impact you. We haven't heard anything. This has sort of been rumoured a lot that they might sort of backdate when you have to pay back your student loan. So maybe reducing that threshold for when you actually start paying it. Nothing on that today. It could be that's announced in the next sort of few weeks or something like that. Who knows? We'll wait to see. If I hear anything, obviously, I'll let you guys know. And actually on that topic, we've got a question here from As Dave. What are your thoughts on student finance interest continuing at 4.1% while studying and then potentially being lower than that once you graduate when it reverts to a sliding scale based on salary? Yeah, I mean, the whole thing needs a bit of reform. I think it seems it's all a bit of a mess. I mean, if you guys ever listen to Martin Lewis, he's always talking about this. It's a bit of a real sort of pet project of his to try and get this changed. It isn't a loan in this way that we really would think about a loan. It is a graduate tax, so you only really pay it back when you earn a certain amount. But it does seem all like it is a mess, isn't it? And it is confusing for lots of people. But particularly the idea they might change that and backdate. You backdate people who already have a certain limit they're meant to be paying it. They could reduce that. You already could be sort of saying, right, I don't have to pay it just yet, but suddenly you have to start paying it, and that can make a big difference. Hi to Beat Baby and Sandy and My Life. Let's have a look now on what's going on in personal tax and savings. So the things we're actually going to be paying ourselves on our income or on our purchases, stuff like that. Now, there weren't any big announcements in terms of things like income tax and national insurance because we've already had those announcements. So last year, it was announced that we would, or was it in the summer? Not summer, in the budget last March. Anyway, at some point, one of the last guys, they announced that income tax thresholds are going to freeze. Normally, you'd expect them every year to sort of go up a little bit, which means how much you could earn before a certain tax bracket came into play would it get higher. So you would essentially pay less tax. That was frozen, and that's going to carry on being frozen for a while. And what that essentially means is if our wages go up, if we get an increase, which you kind of hope you would do, that will push you potentially into those higher tax brackets. So lots of people will move from that not paying tax at all into paying 20% tax on the amount above that threshold. More people will again be moved from paying 20% tax into that 40% bracket, again, only on the tax that's above that threshold. The thresholds don't move, but our salaries move. Obviously, more of us will pay tax. So there will be a tax hike coming in from next April, just nothing announced today. Likewise, national insurance in September, they announced that's going to be an extra 1.25% on your salary is going to be added in again from next April. So you will pay more tax. Just wasn't announced today because they put it in other announcements at other times. Incidentally, there's also going to be an increase to dividend tax. If you do take dividends, whether as a company director or from shares, again, that's going to go up by 1.25% as well. The taxes we do know about, alcohol tax. He made a big thing of this. I thought this was kind of taking it too far. I'd love to know what you think, whether it was kind of you're excited about this change to alcohol tax, but it was a big part of it. And I think he was trying to make out that this was like, hey guys, I'm saving you money on your Prosecco and fruity ciders. He's going to revamp how alcohol is taxed. And that makes sense. I think it makes sense to do this. Apparently there are 15 different tariffs on booze right now. There will be just 6. And the basic principle of this is that the stronger the alcohol content of the booze, the higher the tax rate will be. So that's to discourage people drinking strong alcohol. Now that will have an effect on things like ports, as well as in things like those kind of, diamond, what was it called? Diamond White. Was that the cider everyone used to have? You know what I mean. So they have a higher impact on that. But also if you have like the session beers or low alcohol stuff, again, you'll see the duty on that reduced. There will also be kind of a leveling out of stuff. So it will remove things like apparently now there's already an extra tax on sparkling wine, which is why sparkling wine is more expensive than still wine. Right? That will even out. So if the alcohol content is the same, then the tax will be the same. Doesn't mean the actual bottle will be the same, because obviously manufacturers can do what they want with that in terms of charges in supermarkets as well. But that will even out. Similarly, fruit cider will be taxed at the same rate as apple and pear cider. There's been a difference there previously. We're also going to see 5% relief on draft beer and cider at pubs on tankards over a certain size, not tankards, tanks, over a certain capacity. So in theory, that's going to make it cheaper in the pub as well. But what's interesting here is this doesn't take place for another year and a half. It won't be till 2023 those new rules come into play. So our booze is still going to be getting more and more expensive based on rising prices, the cost of living, all those things that are making the manufacturers increase costs. Booze is still going to get more expensive before this new taxation comes into play. Before we move on, let's just see if there's any more questions around those things we've discussed so far. Sia says, silly thing to hype up the reduction in alcohol tax. Aren't we trying to make our population more healthy? Yeah, there was nothing about any other sin taxes. Previously we've had like the sugar tax. There was nothing about that kind of stuff, raising revenue from trying to discourage us from eating certain foods which aren't great for us and try to improve our health, which in turn would hopefully reduce the impact on the NHS later on with things like diabetes. None of that. Really, it was just about trying to make booze taxation fairer. But in theory, could it cost us more? Could it cost less? Who knows? But if you like Prosecco, that's the good news there as well. Another thing here, Deals has said here, I'm glad fuel tax for cars has not gone up, but price will creep up with demand over coming months. Yeah, so for the 12th year in a row, fuel duty increases has been cancelled. Every year it's due to go up by a couple of pence per litre, something like that. So be relieved with fuel prices obviously going up as much as they have been over the last few weeks. They won't go up any further due to tax, but of course it doesn't mean they won't go up any more from the record high they're at right now because of other events going on in the world. There was nothing else that was announced in terms of helping with fuel prices. There was nothing in terms of helping with energy prices. It had been rumoured there might be a cut to the VAT on our gas and electricity bills, currently set at 5%. It's still 5%. That's not going to change anything. Now, whether that's good or bad depends on your point of view. Obviously, a 5% cut on our bills would be lovely, wouldn't it, when they're getting so high right now? But you could also argue that it's not targeted, that everyone would get that discount, and maybe it'd be better to have something which helps those people really at need. Of course, that wasn't announced in the budget. Maybe it will come later on. But at the moment, our gas and electricity and our petrol prices are all going to be high and possibly getting even higher. Talking about what we've been, some of the things so far. Stephen says minimum wage should be £10 an hour. Yeah, I think that makes sense as a very minimum. I think we'll see when the national living wage from the Living Wage Foundation, when they announced in the middle of November what they think it would be, I wouldn't be surprised if it's nearer 10 quid for around the country. It's already above £10 in London. That real rate, if you really want to be able to survive without going into poverty, the rate it must be above. So I think you're right, £10 would have been a minimum. Obviously, employers can do more than this if they want to. It's just people who are already paying the minimum, they will have to increase to £9.50 an hour. So this is from Abdallah. I'm so confused, sir, today. Rishi Sunak said that there was going to be a tax increase to pay back furlough, but today he's offering pay rises and also increase on national living wage. I'm confused. Can you clarify? Yeah, it is confusing, isn't it? So don't forget, right, as I mentioned before, there are some tax rises coming into play. They're just hidden. The national insurance one was announced last month, and that kind of freeze on the levels where you pay your income tax. So that will take in a lot of money over the years. There may well be more things to come along at some point, and there may be some things hidden that we don't see or things that just get announced. But yeah, at the moment, there have been some increases and not too many kind of increasing wages, not too many tax increases announced. But there are some, but we'll get through some of those in a minute. Gosson, talking about alcohol, says, oh yeah, alcohol tax. I'm already thinking to add craft beer to my artisan food menu, given the tax incentive. So you see, craft beer, small brewers, they will get a bit of a tax incentive to just reduce the duty on their products to make them slightly more competitive with the other suppliers. Although interesting, I did read, you mentioned about the that draft tax. So you get 5% discount if you're serving beer and cider by draft. Apparently, I think it was like 400 litres is the size of the tank where that works. And a lot of craft breweries haven't really have smaller tanks than that, so they wouldn't get that. So that may well change because it feels a bit like with one hand they're being supported, with the other hand they're being penalised. What else we got? There's a lot of stuff, particularly with petrol, right? Okay, so we understand why they're not hiking the tax on petrol right now because prices are so high. But it is slightly at odds with what's going on with the demand broadly across society, but also from the government themselves to kind of reduce carbon emissions, isn't it? So you want to generate income where you can to try and deter people from taking certain routes. And one of those areas is flying. In theory, if you increase taxation on flying, people might go, oh, maybe I won't fly. Maybe I'll get the train. And that makes the other kind of weird thing that's been announced in terms of taxation a little bit sort of, it's odd, right? So if you are going to fly in the UK, the air passenger duty will be halved, 50% discount on that. That's essentially encouraging you to fly within the United Kingdom, isn't it? Which again is at odds with the kind of sort of green policies. Got a few questions here around that. What have we got here? What was Stephen says, were there any incentives about biking or electric bikes? No, nothing like that. No kind of sort of encouragement in any kind of green kind of initiatives really at all. What else we got? I'm sure I saw something else about green stuff somewhere. I'll come back to it if I spot it again. Sticking with air passenger duty though, there are going to be some increases for a very, very small number of people. And this is people who fly long haul. So if you're going to go more than 5,500 miles from the UK, there will be an additional tax paid on those flights. £91 from economy class. So presumably if you're going business or upper class or whatever it might be, that tax will be slightly higher. 5,500 miles basically covers Asia, Australasia, South America, and potentially the west coast of the USA. I found a website where I had a look at how far 5,500 miles is. You could type in different destinations and it gave you the kind of the routes. Now, if you went from London, Los Angeles was not 5,500 miles away. It was just under. If you flew from Edinburgh, then it was more than £5,500. And bizarrely, I'm not quite sure how this works, but maps aren't geographically, the big global maps aren't geographically correct, but it was the other way around. So from London, Mexico City was more than 5,500 miles, but it wasn't from Edinburgh, which I'm not quite sure how that works but anyway. So the website might have been slightly wrong there. But what was interesting here is that that makes me think that there must have some kind of sort of zonal thing come into play, because I don't think they'll make it more expensive to fly from Edinburgh than it is from London to some of these destinations and vice versa. I'm sure they'll just kind of go, right, if they're on the coast, there maybe the west coast is fine because it's just on the edge and it's just once you get into the Pacific Ocean. But anyway, that is going to be an extra cost. So that is kind of, again, around environmental things. That's the only thing really that was announced today that was going to try and raise some income for environment. Chris has said, I heard that big corporations like Amazon will pay less tax. I didn't watch all of the budget. Can you explain if this is true and why? So nothing was announced today in terms of either a digital tax. That's something that's been mooted before. The idea that we as consumers, we would end up probably being passed to us that we would pay more for purchasing things online because those companies would be charged more of this tax and they probably would pass it to us. But try and level the field between bricks and mortars, high street shops and online shops. Nothing was announced about that. But there is also a broader thing, that's sort of global thing that's been going on for a while now, and it's probably will go ahead. It just wasn't announced today, where there will be a global minimum corporation tax of 15%. Now, we already charge more than that in corporation tax, so this wouldn't necessarily, in fact, we wouldn't reduce our corporation tax to meet that. In fact, if anything, corporation tax is due to go up starting, I think, next year, if not the year after. But it might be some countries like Ireland or Luxembourg, who generally have had very, very low taxation rates for corporations. They would have to lift up to meet that 15%. Now, it's very complicated. I haven't seen all the details, but it's not going to be perfect. What it could mean, though, is that, yes, Amazon are forced to pay more tax in those countries. Whether it comes back to us, that's still to be defined. One article I read said that it's about the home country. So some of that money would come to where the tax is levied, but actually it would be based on where the organization is actually kind of registered. So with Amazon, probably wouldn't be America, it'd probably be Luxembourg, which is their European kind of headquarters. So they'll pay more tax in Luxembourg and a little bit more here, but it might even out that in some countries they pay less. But countries that are based in the UK, so for example, maybe a bank like Barclays, they would pay more tax here rather than elsewhere. Once we have all those information, I'll let you know, but it wasn't announced in today's budget. Either of those measures weren't revealed. What else we got going on here? Lots of these messages coming through. Great. I love having this. I love chatting to you guys. It's always really, really fun. This is obviously a little bit different because I'm giving you lots more information rather than just answering your questions. What else is going on? Right. There's not too much more to tell you about, actually, in terms of the budget. Then we can get on sort of broader questions. The really, I'll let you know about where some of this spending is, some of the spending announcements are. They announced, this is a bit cheeky, because a lot of these kind of cheeky announcements actually came through. They announced a regional transport package worth 6.9 billion to fund buses, trams, trains in England, with further money going to Scotland, Wales, Northern Ireland. Although it turns out that only 1.5 billion of that was new money. The rest had been previously announced in previous years. Okay, that 4.2 billion, that was in 2019 it was announced. So that's a bit cheeky, but you might see some sort of redevelopment of transport, public transport in your area. There was a tax announced on massive sort of property developers who make profits of more than £25 million a year. They would get 4% tax on profits above that amount, and that would go into a fund worth £5 billion to pay for cladding removal of unsafe towers like Grenfell. Though it turns out, again, that's been announced 3 or 4 times in the past already. It wasn't new money, it was just announcing it again. So a little bit weird there. School funding will return to 2010 levels, worth an extra £1,500 per pupil. What's interesting there is it just shows how much money has been taken away from education since 2010 under austerity. So we're only back to those levels. And obviously, inflation would mean really you need more money to get back to where you really were at that time. There is going to be more money as well put aside to fund T-level qualifications, although again, that was announced a year and a bit ago. There's about £5.9 billion will go to the NHS to fund equipment to help with reducing the waiting list for scans and tests that have built up. And there's going to be £850 million to help redevelop or refurbish major museums. And that's broadly it. There are a few other bits and pieces, but let's try and get through to a lot of your questions. Hi to Christian, hi to Living in Colour, hi to Sally, hi to Alex, hi to Alka, hi to Budget Jones, hi to Asbot, hi to Just Mac, hi to Chloe Deals Club. And Christian says they're playing a game. Yeah, I think in lots of ways they are when they do this. It's just kind of smoke and mirrors, isn't it? Look at what we're doing, isn't it great? And they can trot these numbers out. And if you don't look into it in more detail, you just hear all these huge amounts of money going through and you think, well, that plus that plus that, loads going on. Yes, it's a lot of money, but not as much as they say there is. Sia says, silly thing. Oh, no, I've done this one. Sorry. Get for these questions. I need to get better at this, don't I? Reading these questions as they come through. It's because I'm zooming up and down them. Normally I do it in order. I think that's most of you. Any more questions you guys got the budget, obviously just throw them through. What I'll do now is I'll probably look back and have a look at other questions you've got, because I know not all of them are related to the budget. And if I spot any more, I'll go through. Darren says, hi, Andy. Andy, I've opened a Chase account. What's your thoughts? I've seen good reviews. Yeah, I've got a video review on YouTube, an article review on the blog. Do check that out if you're interested in Chase Bank UK. Mixed bag, but ultimately, if you're getting 1% cash back on your purchases, that's no bad thing. So I'm a fan of it in that sense, but definitely not as a replacement for your main account. Starburst has said, hi, Andy. I have 2 current accounts, which with one bank. Do I have to close the whole bank or just one account after the switch? So if you've got 2 current accounts and you switch away from with one of those accounts to a new bank, you're only switching one account. You're not switching your whole bank. If it's a current account, you're only switching one of those current accounts. So once that's gone, the new current account, so the old current account will still stay there in the old bank, and the new current account in your new bank will also be there. So you still have 2 current accounts, but they'll just be separate banks. Don't need to do anything with that at all. Tracy has said, I think most people back on the budget, I think people forget small businesses won't pay £1,000 per year extra. It'll be more if you factor in employers' national insurance. Absolutely, yeah. That minimum wage increase, £1,000 in salary plus they've got national insurance, which, as we said, is going up as well. So there's a lot of money, extra money employers will have to find to fund that increase. Billy says on the Chase account again, after using the Chase account for a few weeks, how much cash back have you received? It's a good one for you guys to share. I think I mentioned before that I'm actually taking advantage of a welcome bonus with Amex Platinum right now. Spend $6,000 in 6 months and you can get 60,000 Amex reward points, which if you convert them into Avios and then into Nectar points could be worth close to £600 in Nectar points. Although you have to factor in the annual fee, which if you cancel the card, once you've got the bonus will be pro-rata back. So let's split it in 2. Let's say it's worth about 250 quid profit to me having this card. So I'm using that at the moment and then I'll go back to Chase. But obviously how much you earn depends how much you spend. If you spend £100, you'll get 1% of £100. You spend £1,000, you'll get 1% of £1,000. Obviously, don't spend more than you normally would just to get the cash back. It's all about everyday spending, whether it's Chase, whether it's American Express. Question here on Instagram from Maybe Kelly. Does not using your credit card lower your credit score? No, it doesn't. But if you've got a credit card, it can help boost your score. So if it's not in a great place right now and there's you don't use any credit cards, if you do regular spending on that credit card and at the end of the month when you get your statement, you pay off that card completely so no interest is charged, that will demonstrate to lenders that you are responsible with using credit of any kind. You're using a credit card, but it's the same for any kind of credit you might get. And that in turn will boost the strength of your credit report, and that will be shown in your credit score. So it's if you've got one and you want to do that, that's a good option. But if you have a decent credit score and it's sitting there, it's not doing any harm particularly. Although there could be a question about access to how much credit you have, if there's a number of the cards with high credit limits, but I wouldn't worry about that one too much. Hi to Angela and to Novus and to Jane and Smiling Sonia. What else we've got going on? Let's try and get back to these questions you've got over here on YouTube. Sia says, what effect can you see the rise of inflation having on our savings accounts? So inflation obviously is bad in lots of ways if the interest rate on your savings is below that. Right now, it's practically impossible to find a savings account that is going to equal or pay more than inflation, which basically means our savings are all losing out in real terms. What you kind of still should be aiming for, though, is to make sure your money is getting the best rate it can. So if you've got sitting in an account that's earning nothing or 0.01%, move it to an account that might earn you, depends how much you've got, 2%. 0.65%, whatever it might be, depending on the amount of money you have and how much access you need to it. Make sure it's at least getting something. Now, if inflation continues to rise, that could see the Bank of England to try and combat that, increase interest rate. The Bank of England base rate could increase. And that would affect things like mortgages and debts and all kind of things. In time, you'd hope you'd also see that increased rate trickle through to savings accounts. But there's no guarantee that it will. But you'd hope it will a little bit. But when we're talking about interest rate rises at the moment, we're talking about relatively small amounts. So maybe up from currently we're 0.1%, maybe 0.25% by the end of the year, maybe by end of next year, 0.75%. That's what the current speculation is. It's all speculation. So that's a decent amount more, but it's still, we're not talking anywhere near the kind of idea of getting 5% interest rates or anything. It'll take a long while for it to get there, apart from maybe a few kind of banks might try to offer something as an incentive, as they currently offer 2%. Maybe that'll go up to 3 or to 4 or something like that. So there's one to keep an eye on. Ghost in here says, hi Andy V here. The cultural sector got a tax cut, and combined with a 50% business rate waiver, it could be helpful in the short term. I can just hope people have the knowledge of how to take advantage of it. Hedwig says, I like your shirt. Thank you. This is the whole thing. What else we got here? So, question about energy. Disgusting, Billy says. E.ON have put my direct debit up from £100 to £165 a month. Still miles cheaper for me to stay with them, but these taxes are squeezing me to the max. This is a really, really interesting point around energy bills. It's worth kind of talking about a little bit here. There are a couple of things going on that will see your bills increase. Some of them will be fair, some of them might not be fair, okay? So it's worth sort of just clarifying this quickly. If you were on a variable rate tariff and your bills have increased as a result of the price cap going up, obviously your bills are going to be more, so your direct debit will be changed to accommodate how much extra the energy will cost. Obviously, if you use less energy, you might be able to reduce that a bit, but ultimately, every time you use anything, your bills are going to be higher. If you've been on a fix and that's ended and you've automatically moved onto a variable tariff, then again, that will see a change in your direct debit to accommodate that change. What's also happening though is that some companies are potentially saying, right, we've moved your direct debit to this, and it's really, really, really high, potentially more than that difference in the price cap now to what it was would justify. Now, if you think that is the case, it's worth contacting them and saying, can you explain to me why you've increased my direct debit by this much? It could be, and I'm not saying they're all doing this, or in fact, any of them are doing this, but it could be that because they are struggling for cash flow right now, they're increasing your direct debit so they get more money from you to help balance their own kind of budgets, balance what's going on at the back end for them. And then if prices drop down or if you've overpaid, then they'll repay you later on. But it's worth just checking with them if they can justify exactly why that price has gone up so much. Well, direct debit, has gone up by so much. And if it isn't fair, you can ask for it to be reduced. Obviously, if you do get it reduced and it's less than the energy you actually use, you will owe them money. So you've got to bear that in mind. Okay. Andrew has asked, would you advise me to carry on getting the Halifax £5 reward? Can I pay it into an account and transfer it back again? What would you do? Okay, so in answer to this one, actually, in the podcast that came out on Tuesday, so yesterday, episode 227, I want to say, that is the listener question that I spoke about here. How you kind of to make the most of this Halifax reward bonus of £5 a month when you were using a cashback card if you're switching from Amex to Chase. So check out that episode. It's near the end. Listen to the whole thing. Loads in there. Worth listening to. I will explain that one for you. Cloudy Skies said, yeah, Andy, you should have cut the VAT on energy until May. Many people will have greater financial troubles as a result. Absolutely. Talking about the energy thing, Tina has said, yep, I had similar thing from OVO. These companies hold the funds in the bank and earn interest. If you pay by direct debit, you can ask them to bill you when you're in debit to clear it. So as I said before, challenge them if that's the case. Sebastian says, talking about Chase the card, has made me using my Barclaycard rewards card pretty much redundant now. It's all about the Chase card. Hope they keep the 1% cashback going after the 12 months. Talking about the budget, Chris has said anything on defence spending. Nothing that was announced. There could have been stuff buried further in there about what they're doing there, but nothing that was particularly hitting the headlines. Hi to Dimitrov and to Ben and Vanda and Cluffy and to Tekalo and Anti Laru. Nice to see you guys. We've probably got another sort of 5 minutes left, so I'll just go through these last sort of questions we've got here. Hope this has been useful. I know it's a bit different to normal how we do this. I'm just sort of relaying loads of information at you rather than answering the questions, but hopefully it's made things clear. Again, I have got a whole article over on the blog, becleveryourcash.com, which breaks through the things I was talking about at the beginning, all those major budget announcements, the ones that are going to impact us as everyday consumers, everyday kind of taxpayers. You know, that's an article well worth checking that out. I also go into more detail on this in tomorrow's episode of the podcast. Cash Chats will be out on Thursday rather than Friday, the Your Money This Week episode. And we're talking about a lot of the things that are in the budget, so do check that out as well. Ollie said, which is better now, universal credit or working tax credits? Don't know the answer to that one. That would be something I imagine a lot of the kind of benefits websites. So Entitled To is fantastic. Turn to Us is fantastic. They have all these calculators letting you know what you're entitled to. It will take them time to kind of obviously amend this based on that taper rate changing from 63p to 55p. So give it a bit of time to have a look at that and see what they say there. Sia has said, Andy, what will your strategy be after your Amex Platinum bonus pays out? Will you take a break for that 2 years to benefit from another big bonus, or do you think you'll take out another card immediately? Okay, so what we'll do here, this is actually in my wife's name. This Amex is already in her name. Because what I did is when I had my card, got my payout the last time I had an Amex, I cancelled it. And my 2 years since I cancelled it will be taking place next spring. So I'm actually already in that 24-month waiting period for me to be able to claim a new bonus. When we cancelled mine, we opened up a card in my wife's name. So she got a welcome bonus then. I got a supplementary card. So we're both earning on it. We're both earning the cash back on our purchases. And when I reach my 24 months so I can get a new Amex, we'll cancel my wife's cards and she'll start that 24-month waiting period. So in terms of the Platinum card, what we'll do when we get that bonus, when we've hit that $6,000 spend and got that bonus in the account, in fact, before this, we'll open up a membership rewards card, which is the free membership reward cards. And once you've got that, it means that when you cancel the Platinum, your points will stay valid. You need to have an active card with membership reward points on in order to keep them. If you just cancel the Platinum card when you got them, you'd lose your points. So you have to have that free card open. So we'll get that one open. We will cancel the Platinum. We'll get that fee refunded pro rata. And then we've also still got the Platinum cashback credit card, where we'll keep that going for a few more months than we necessarily need to. Not the best paying one, but not a bad paying one. Again, cancel all those cards as soon as I've got a new one and start that 24-month period for my wife. Hope that makes sense. Right, what else we've got going on? There's last few questions here. MC, this might be a bit more complicated, this question, MC. Why don't you send me an email, Andy@BeCleverYourCashMC, and I'll have a look at that there. I think it's a bit too much to talk about right now. Rob has joined, a bit late to the party, yeah, but you'll be able to watch this all on Catch Up, Rob, if you want to. This will be live to watch Instagram and on YouTube, again, if you did miss anything. Budget Jones Diary says it's been really helpful. I'm glad that it was. That's fantastic. Dan H says, what are your thoughts on the investment platform, John Lewis, powered by Nutmeg? Don't know. Haven't looked into it. Again, I think for a lot of you guys who follow me regularly, you know, I don't talk a lot about the investment stuff. I have my own kind of like what I do and my own kind of like knowledge of this, but I'm not someone looking at every single platform as it comes along. So I don't like to talk about those different ones because it's something which, if you get it wrong, it can be quite impactful. So do some research, see what you think. I'm sure some people have mentioned it. JC has said, hi, Andy. I just got my first American Express, fantastic, well done. If I want to increase my credit score, should I get a second credit card? No, it won't make any difference. Just use that first credit card responsibly. As I mentioned earlier on, as I mentioned in all my credit card videos, these rules are really, really important. So if you don't know what I'm talking about, check out any of my credit card videos on YouTube, where there will be a section where I go through the rules. But use it responsibly. Only use it for purchases that you're going to make anyway. Make sure you have that money set aside so you don't spend it from your current account by mistake. And then when you get that statement through, make sure you pay it completely so you don't get charged any interest, and make sure you do that every single month. It will take a bit of time, but after a few months, 3-4 months, maybe you'll start to see some movement on your credit report, but keep on doing that. A second card maybe can make a little bit of difference, but I wouldn't get too carried away with it. I don't think it will make too much of a difference. You better just have one card and do it right than have two and maybe get a little bit confused. I think that's it. So if I didn't get a chance to answer your questions, guys, very sorry. I didn't give you a hello sort of shout out again. Sorry for that. I sort of wasn't following the thread of stuff in a kind of narrative linear order here because we were jumping around with the budget announcements. Do come back for the next live. There won't be one next week. It will be the Tuesday after that, which I believe is the 9th of November. It'll be 7 p.m. Tuesday, 9th of November. That is the next live. Any further questions, obviously you can get in touch through all the usual routes and leave me comments below these videos as well, and I will get back to you when I get a chance. All right, guys, enjoy the rest of the week. Cheers.